Assalamualaikum warahmatullahi wabarakatuh and hello everybody. In this video, I will show you how to prepare a general ledger. If you like this video, please subscribe, like and share. Posting to general ledger. A general ledger is a set of number accounts a business uses to keep track of its financial transaction and to prepare financial reports. The accounting data is posted from journals. Each account is a unique record summarizing each type of assets, liability, equity, revenue, and expenses. Posting is the process of transferring records from the journal into the appropriate ledger. How to prepare a general ledger? I will show the steps of preparing a general ledger by taking an example of accounts receivable using T accounts. A T account is an informal term for a set of financial records that uses double entry bookkeeping. The title of the accounts is then entered just above the top horizontal line, while underneath debits are listed on the left and credits are recorded on the right, separated by the vertical line of the latter. The journals involved are Sales Journal, General Journal for Sales Return, and Cash Receipt Journal for payments received from customers. In Sales Journal, we find that accounts receivable is on the debit side, amounting to 27,000 for sales. In General Journal, we find that accounts receivable is on the credit side, amounting to 800 for allowance and sales return. In Cash Receipts Journal, we find that accounts receivable is on the credit side, amounting to 15,680 for cash and 320 for sales discounts. There are a few steps in preparing the accounts for accounts receivable. The first step is to draw the accounts line. And then write down the accounts title, that is accounts receivable. For accounts receivable, the journal involved are Sales Journal for sales, General Journal for sales return, and Cash Receipt Journal for payment received and discounts. The second step is to write down the balance brought forward. Accounts receivable is under assets. The assets normal balance is at the debit side. So, write down the balance brought forward on the debit side. That is, 1st March balance brought forward equals to 0. The third step is to insert all transactions or accounts. We start with sales journal. In sales journal, we found that accounts receivable is debit amounting to 27,000 for sales. So, you have to write down at the debit side sales 27,000 on 31st March. Then, look at the general journal. In general journal, we found that accounts receivable is credit amounting to 800 for sales return. So you have to write on the credit side sales return 800 on 12 March. And then we look at cash receipt journal. In cash receipt journal, we found that accounts receivable is credit amounting to 16,000 and it is divided into two. That is cash 15,680. So write down at the credit side cash 15,680 on 14 March and sales discount 320. The fourth step is to balance the accounts left and right. So you have to calculate the bigger amount whether it is on the debit side or on the credit side. We found that on the debit side is the bigger amount, 27,000. So write down 27,000 left and right. And what is the missing figure? And the last step is to write down the balance carry forward. So, the balance carry forward dated 31st March amounting to 10,200. So, the missing figure is 10,200. And on 1st April, the balance brought forward is 10,200. Nominal account. In the general ledger, there is also a group of accounts called nominal accounts. A nominal accounts are accounts related with expenses, income, losses or gains. For example, purchase accounts, sales accounts, and expenses accounts. Those are items in income statement, except inventory. It is also known as temporary accounts that is only for one fiscal year. They close out at the end of the fiscal year and start the next year at zero. It means that there is no balance brought forward, and there is no balance carry forward. Replace with by income statement or balance. Preparing general ledger for nominal accounts. I will show the steps of preparing a general ledger by taking an example of sales accounts using a T account. The journals involved are sales journals for credit sales and cash receipt journal for cash sales. In sales journal, we find that sales is on the credit side amounting to 27,000 for accounts receivable. In cash receipt journal, we find that sales is on the credit side amounting to 134,680 for cash. Steps in preparing T accounts for sales. The first step is to draw T accounts line and then write down the accounts title, that is sales. The second step is to insert all transactions or accounts. For sales, the journals involved are firstly, sales journal for credit sales. In sales journal, we found that sales is credit amounting 27,000 for accounts receivable. So you have to write down at the credit side accounts receivable 27,000 dated 31st March. Secondly, cash receipt journal for cash sales. In cash receipt journal, we found that sales is credit amounting to 134,680 by cash. So, you have to write down at the credit side cash 134,680 on 31st March. The third step is to balance the accounts left and right. So, you have to write down the bigger amount between left or right. We found that at the right side, that is on the credit side, it is the bigger amount amounting 161,680. So write the amount left and right. So what is the missing figure? And the last step is to write down by income statement or balance. On 31st March, by income statement or balance amounting to 161,680. that is the missing figure. You can see that for nominal accounts, there is no balance brought forwards and there is no balance carry forwards. Okay, that's all for now. I hope that you can prepare a general ledger using the accounts. If you enjoyed this video, please subscribe, like and share. Thank you for watching. Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera.